Hi guys, Max here, and as you can see, this is yesterday's stock performance and things really didn't do too well. Actually, most stocks fell for the day, but we did see a little bit of volatility with the S&P 500 being up by as much as 1% at some point during the day before falling back down to negative 0.1%. Tech performed worse on the whole, with some companies like Nvidia in particular doing really poorly. Nvidia fell by 8% at one point during the day, and the Nasdaq 100 was down by 0.4% by the end, with the Dow Jones paring any gains or losses and just finishing with no real change. Across the rest of the world, it was a little bit better for the most part. The Americas were relatively strong, and actually Europe was up as well, though China was really quite poor with more turmoil over in that country. The FTSE 100 and the Stoxx 600 then both rose by 0.7%, while the MSCI World Index rose by just 0.1% on the whole. Well, the dollar really didn't lose or gain much value, and so it's still sitting against everything else exactly where you would expect it. The euro is still at $1.02, the pound is still sitting at $1.21, and the yen is still sitting at 135 per dollar. For the bond markets then, we actually saw yields fall and prices rise, with the US 10-year Treasury yield falling by 7 basis points down to 2.76%, right around where it has been sitting for most of the last month. The German 10-year yield was down by 6 basis points, and the British 10-year yield was down by 10 basis points as well, as we saw slight moves into fixed income assets as equity prices fell, so people just moved into risk-off assets. Finally then, for commodities, well, oil prices rose slightly, but they're still lower than they were about a month ago. WTI crude oil is sitting at about $92 a barrel right now, so up by about 2%. Brent crude is sitting at about $98 a barrel, so a fair bit higher. And then gold prices rose slightly too, up to $1,805 an ounce. In the world of crypto, well, asset prices were down, but not by ridiculous amounts. Bitcoin was down by 3.5%, Ethereum was down by almost 5%, but they're both still sitting at the kind of level that you'll be getting used to hearing them at. Bitcoin above $23,000, Ethereum at around $1,700, and the most altcoins were down in that region as well, something like 5% on average. What was the actual news for the day then? Well, Nvidia came out and gave us some really bad news, and so their share price fell by 8% for the day, which was really quite poor. Now, what actually happened? Well, they put out some preliminary earnings reports prior to their actual earnings report for the last quarter in a couple of weeks, and they're predicting that their revenue for this last quarter will be $6.7 billion, which is way below the $8.1 billion that investors were expecting to see. That's a 17% miss, so no small thing at all. They're blaming this on their weak gaming revenue, which was a little bit unsurprising to anyone who understands what kind of economic environment we're in right now. People are feeling poorer, and one of the first things that you're not going to buy when you have less money at the end of each month is a graphics card for your gaming computer that you really don't need and can cost upwards of $1,000 or more. As a result of this, their gaming revenue is actually down 33% year over year, which is pretty poor for a company and an industry that is supposed to be growing exponentially. On top of that, the company is still struggling with supply chain disruptions. Those are still hurting them as well, making it difficult for them to build out certain parts of their business, which need new technology to get them to actually thrive. Now, of course, this is not their full earnings report, so we will get more news out in a couple of weeks, but it is still bad though, and the share price changing, falling by 6 to 8% for the day reflects that in its entirety. It's also possible that we see this as a further trend and that other semiconductor and chip manufacturers' stocks see a similar sort of thing over this next quarter or so. And so this is a little bit worrying to investors. Now, last week we got the US jobs report for the last month out, and we actually didn't cover it on this channel because we were busy. So what actually happened with that? Well, the unemployment rate fell to 3.5%, which is on the surface really good news, and 528,000 brand new jobs were reported as well, which is again on the surface really good news, and this is an incredibly strong jobs report. Of course though, these are just headline figures and there are problems underneath the surface. The first one is that almost 100,000 of these new jobs were actually second or third jobs, and close to another 100,000 of them were just part-time jobs in their entirety too. Now, these kind of jobs aren't brilliant for the economy. Second and third jobs in particular, they are sort of false positives, and they're actually signs of struggling consumers as opposed to people doing really well. We also saw the labor force participation rate for the US actually fall once more, which means that there are fewer total people working in the United States this month than they were working last month. Well, if that's the case, then how did the unemployment rate actually fall? Well, it only measures people who are out of work but who want to re-enter the workforce. People who leave with no intention of getting another job don't count towards the unemployment figure, and retirees and people entering full-time education also don't count towards the unemployment figure either, so it's always going to be a little bit skewed by those sorts of changes. Now, this was, though, despite those little caveats, still a very strong job report, and usually under normal economic environments, that would be a really good thing. But there is, of course, a second problem here, and it is that this strong jobs report is a sign that inflation isn't actually slowing down, and that's really pretty bad. A really strong job market means strong wage growth, and it means more inflation in every single sector of the economy that you can imagine. And of course, inflation is the name of the game right now. It is pretty much all the Federal Reserve cares about. It's all that most parts of the government care about, and it's all that really you and I should care about as well. This report then is bad news for inflation, and we should be hoping for bad job reports in the future for inflation's sake. Another big piece of news is that Trump's Florida home has been raided by the FBI. Now, apparently they were looking for papers or information or records and things like that he wasn't supposed to be holding on to from his time as the president. Now, I'll try and keep my personal politics out of this, but of course the left absolutely love this thing. They are the same people who wanted to impeach Trump, and they wanted him ousted from power in the first place. They were happy that he wasn't elected, and frankly, they'd like him to go to jail and for him to never be able to run again. So they obviously think that this is good news. The right, the people who support Trump, are obviously going to hate this news. They think that it's an abuse of power by the federal authorities. They're pointing to double standards with things like Hillary Clinton, who has been proven to do exactly what the FBI is accusing Trump of doing regarding Benghazi, and she never had her home raided or was charged or anything like that. And then there are the anti-government people in general who tend to hate this because, again, there are a lot of double standards out there because of things like the fact that there has not been a single paedophile charged or arrested for partaking in Jeffrey Epstein's worldwide elite paedophile ring, and instead the FBI is targeting things like this. Now, why are we actually talking about this then? This is not a politics channel. Well, because American politics is pretty screwed, it's insane, and it's getting more and more extreme by the day right now. Of course, we have an election cycle coming up this year, and I do think things are going to get a little bit crazy in 2023 and 2024 as well. When the presidential election cycle comes around, things are only going to get worse, and this will impact markets because uncertainty is absolutely awful for investors. On the surface, if the Republicans win and get into power and increase their influence, then we should expect massive reforms and changes to things all over the United States, including notably to do with tech companies, which are of course dominating the S&P 500 these days. If the Democrats stay in power though, we should expect more attacks on the right to try and ensure that the Democrats can remain in power for even longer. This is all going to be insanely controversial, no matter which way the tide actually goes. Hopefully, I didn't let my personal biases affect that. This is, though, really important news for investors all around the world because it represents the escalation of partisan politics in the US, and this will impact markets and your investments. As for the rest of today, we're just going to quickly remind you all that we get CPI inflation data out tomorrow, and we really need to pay attention to that. It is expected that year-over-year figures will fall slightly, and investors should like that if it happens. Don't be fooled though, just because you have 1 month where inflation wasn't at 9.1%, that doesn't mean inflation is over. Its rate will still be easily above 8% year over year. And don't forget either that that's after the base effect has started to take an impact as well. We've already had over a year of inflation. So if we have a year of 8% inflation followed by another year of 8% inflation, over that 2-year period, prices would have risen by 16%, not 8%, as a lot of people will convince themselves is the reality. Prices will never ever go back down to where they were a couple of years ago. It is also worth noting that lower inflation will impact corporate earnings next quarter as well. It will reduce operating leverage, and it will make things very difficult for an awful lot of businesses all around the world. And then, of course, we have the fact that the Federal Reserve is going to keep hiking interest rates long after this month, even if we have a good inflation data report this month itself. This is not over at all, not by a long shot, and you really shouldn't be deluding yourself into thinking it is. If you enjoyed this video, then make sure to like, comment, and subscribe to bless the YouTube algorithm. It really does help. If you want to join our exclusive community, then check out our Patreon. You get access to our Discord server and extra content like access to my portfolio and buy and sell alerts for all my own investments. Also, make sure to check out the link in the description to Masterworks. It can help you protect your portfolio against market turmoil through fractional shares of art from world famous artists. Art has historically proven to be uncorrelated to the markets, so it's a really valuable resource with the markets falling every week. There's also a link in the description to I Trust Capital, which helps you to invest in crypto through your tax-advantaged IRA, which could literally save you thousands. If you, like me, think crypto going down is a buy-in opportunity, then now is the perfect time to join I Trust Capital. Thank you all for watching. Stay stoic. Until next time.